The broadcast is now starting. All attendees are in listen-only mode.
Good evening, everybody. Can everyone see my screen and hear me? Somebody could just type in a quick yes or a Y to the questions box. Great, perfect. Let's go ahead and get started. So wanted to start off like we usually do. This is the Beginner Circle weekly webinar where we go over some of the things that we cover in the main markets section or the Market Pinball Wizard. And also answer any questions about the services and Elliott Wave in general, and usually just do a review of the main index counts and some of the other things. I cleaned up my primary tab just so that we can have less clutter on it. I didn't move this back over. The only difference here that I have from some of my other tabs is where we count this primary wave 3 top. On most of the charts, I have it over here, and we have this as an X wave, as a big WXY for the primary wave 4. But the yellow fibs are not going to change, and the structure off of that March 2020 low is not going to change. The only difference it makes is if our wave 3 is smaller, then maybe it changes the fib relationship to the fifth wave here relative to wave 3, but the more common fib relationship to look for is certainly still using those yellow fibs as the extension, or just looking back at fib extension versus primary degree wave 1, which isn't going to change based on where that wave 3 is. So in all of those counts, we are clearly pretty far along inside our primary wave 5. There is a little bit of a nuanced difference between the way that Garrett and I are counting versus the way Avi is counting. And the main difference there is that Avi is counting a larger intermediate degree wave 1, and then this consolidation as a running flat for the wave 2. So that doesn't change the overall targets for most of the primary degree wave 5. And it really doesn't change much in the way of the subwave structure that we see right here, but it does certainly change the fib extensions for this parentheses wave 3 if the wave 1 is much bigger and the wave 2 is over here. Then it puts the 1382 extension, or maybe just the 1236, all the way up closer to the 5900 to 6300s. Instead of the more conservative fib measures that we're using based on the structure that seems to fit in line with more of the individual names that Garrett and I are tracking in stock waves. But in terms of trading from where we are right here, that's a little bit of an academic differentiation. We need to trade the subwaves that are in front of us. And with that, in any count, we can be coming into some potential resistance. And certainly the price action that we're seeing is very indicative of fifth wave type action at the degree, at a smaller degree, as far as coming into another potential local top for some more consolidation. And so that's what we're going to zoom in on. Using my uber accelerated bullish count, which has basically been my primary count for the last several months. Actually, probably the better part of a year, been basing it off of this tab. And that's where we are counting off of the September low, kind of an awkward 5 up, and then a very deep retrace for the wave 1 and the wave 2. But that structure really works best with the fibs that we've seen inside the 3 of that wave 3. And the big difference here between, I have an alternate count here in yellow, and that alternate count, which is very certainly a concern, but there really practically is really not much difference in terms of the shorter term effect of whether this is all of the wave 3 of parentheses 3 completing around the 4420s into that normal fib resistance as a 100% extension of parentheses wave 3. So that would be the yellow 3 of 3. and then getting a consolidation back towards support in the 3,900 to maybe high 3,800s as the minor degree fourth wave, and then from there getting a larger move up as the fifth of parentheses wave 3, up towards the normal 138.2% extension. That's the very basic version of Fibonacci pinball. But if we count the subwaves a little bit more meticulously, then it does allow for this to be only the fifth of the third completing close to that 4420 level, and then another fourth and fifth wave up to get that minor degree fifth wave up closer to the 4850 region, which is the 123.6% extension of the parentheses intermediate degree wave 3, and then after another fourth back towards the high 3900s or 4000 region, then we could get a fifth wave up probably well into 2022, up closer to the 5600 region. So the same structure can be completing either move into this local resistance. There is the potential that this tries to extend more as the yellow wave 3 beyond 4420s. But when we zoom in further here, we're going to see that we're counting off of the March 2021 low, a 5-wave move up structure as the fifth wave, whether that is the yellow fifth of 3 or whether that's the parentheses 5 of the circle wave 3 in the more extended version of that minor degree wave 3. We still have 1, 2, 3, 4, and are working on a fifth wave of that 5 up as a fifth. So maybe you could call this just 1, 2, 3, 4, and we're still in the fifth of this third. But we are getting close to this resistance region where we're probably going to get another couple days of some volatility knocking price down. I would certainly like to see some extension over the 4,300 region first, and really ideally getting closer to that 100% fib, whether it's just this 3 or whether it is the yellow 3, and particularly if it's the yellow 3, would really want it to hit that 4423 level or 4424 really, as the blue 100% extension of the parentheses intermediate degree wave 3. So I think this picture here gives you a really good view of one, this very key resistance region, and also the way that Garrett and I like to utilize alternate counts is that we're looking for, while we might have two different variations, it's variations on a very similar theme, and there's going to be a lot of overlap. So in all of these scenarios, ideal micro support levels are now in the 4170s. Really nano support is around 4200. Would really like to see a move over the 4230s, and so that we can get some extension. But we do certainly need to be careful that we are completing some sort of more of a choppy ending diagonal. And so we could get a drop down towards the 4130s and still manage to eke out one more high, at least over the 4,300 region. But this could certainly be a blow off top. But the risk skew that you guys need to start making yourselves aware of is that most of this move up off of the March lows is nearing completion. And at the very least, we have room for some volatility or at least sideways consolidation over another month or couple of weeks. And we could see some rotation. Maybe it's in between value names back into some growth names that have still been beaten up and haven't gotten to move so far. Or maybe it's just within different sectors. And we go into a lot of detail with those potential rotationary moves as we look at in stock waves, as we look into individual subsectors or different sector ETFs on a weekly basis, and post those updates throughout the week. Let's go one level further down in terms of microstructure, but for that, we're going to have to jump over and take a look at the ES chart, which is the Elliott wave, the E-mini S&P 500 futures. And I've been following, I call it the nano counts tab, but it really is just my smaller degree scratchpad, kind of a work in progress. But very similar structure that I'm following for this move. We can see the similar 5 waves up off the March low. I have to go out to the 2-hour for you to see. So the same 1, 2, 3, 4, and we're in that 5th wave. So now zooming into that 5th wave off of the 5th of the parentheses 5 of ideally circle 3. But again, this 4450 region in ES is comparable to 4420s in S&P 500 that we talked about, where this could just as easily be all of that minor degree wave 3 instead of just the 3 of it. But inside that move, we can count this as actually as an ending diagonal here. Doesn't have to be an ending diagonal, but this consolidation as the sub-micro 4 kind of got a little bit deep, and this didn't get quite as far as we'd want it to go. So instead of counting that as a parentheses 3, 4, instead of this microwave 3, we can count that as an A and a B. But then at a smaller level inside that, we can be working on a possible either ending diagonal for the parentheses wave 5. Let's get rid of some of these fibs so that we can actually see the potential price structure. So either to finish off this microwave 3, we have the parentheses wave 5 that can be an ending diagonal, or it can just be a muted version of that blue C wave also as an ending diagonal. And at the very, very micro support level, we really would like to see this 42.15 level hold that we hit at the end of the day, as we have an ABC up for wave 1, this expanded flat for the wave 2, should see an A, B, C structure for the 3rd, a deeper 4th, and then an ABC structure up for that 5th wave. And 4,300 can give us another knockback down of about 100 points, even though technically that would be a micro degree wave 4. And then we can get a move into the end of the month or maybe beginning of July up towards that either 4360s would be kind of a minimal target for the rest of this micro ending diagonal to play out. But again, as we saw on the larger time frame, this 4420 to 4450 region is really the ideal target, especially if it is finishing up all of the yellow minor degree wave 3 of that parentheses wave 3. Okay, let's take a look at some of the other indexes. Let's go look at the Dow, which I think does have potential to be one of the more bullish. In that one, actually does count best as the AVI count, where the September high in the Dow was all of that intermediate degree wave 1, and it had a wide flat for all of the intermediate degree wave 2, and we are still well inside what could still be just be the 3rd of the 3rd of the minor degree wave 3 inside of that intermediate wave 3. So the white count here, or actually I've kind of made it a little bit gray, was the more conservative count that I was using before. But the price structure that we saw, this extension here, and as long as we hold the 33,500 region at this point, really allows for the more aggressive green count, which the 100% extension off of this wave 2 low, the parentheses wave 2, is our ideal target for the minor degree wave 3. That's the green 3 of parentheses wave 3, and that's up here at 41,873. So we really would like to see further extension towards the 37,400 region for the minute degree wave 3 of 3. And we can even get another 4-5 in here. So this could move sideways a little bit. And basically, even though this is in the heart of the third, the bigger extension that we saw was in this move, similar to the moves that we saw in the S&P 500 that we looked at off of that March 2021 low. And so now we can get, just build, some choppy base again as a sideways consolidation that fits as these smaller degree fifths and then fourths and then a fifth of a third and then another fourth. And then we get some more, a bigger extension move up from maybe the 35,000 region up towards that 42,000 region. But ideal support at this point is going to still be holding the 34,000s, sorry. Let's take a look at the Nasdaq. Nasdaq, I think, counts even further ahead than the S&P. And really this could be, you can count this as the fifth wave of the intermediate degree wave 3 as an ending diagonal, where this was an ABC up for wave 1, an ABC up for the wave 3, and this can be an A, B, and working on a C wave up for the fifth of that wave 5. But it does put it pretty much in line with still looking for a local top, ideally from getting closer to the 15,000 level. Although technically this can count as all of that fifth of parentheses wave 3, and that's what's implied here by this purple wave 4. So if we were to start breaking support, which right now is in the 13,370 and then 13,002 or 13,000 region, then we'd be looking for a drop down towards the 12,000 region as at least the A wave, if not all of this purple 4. So that might be the A, and then it gets a B and a C wave as a wider move. But as long as this is going to hold, the 13,000 level, and ideally, 13,370 or 13,400, really want to see it move a nice blow off top potential for a more extended ABC up for this wave 5, closer towards that 15,000 mark. And then looking at the Russell, the Russell is much more of a mess. It was probably the better chart for much of the last year or more, really providing us a great 5 up and this expanded running flat for the wave 2. And so the Russell was one of the charts that Garrett and I highlighted a lot in stock waves and on the site based on what we were seeing from the individual names in stock waves. And we're pretty pounding the table bullish and got a phenomenal move up and had potential and still do have potential for this to still be extending higher in the minor degree wave 3 of our intermediate wave 3. But as this ending diagonal, it's gotten pretty awkward and messy. We could still be in a larger version of the circle Roman numeral wave 4, but because we did hit the 100% extension here and then are not clearly getting a move that looks like it fits with a, inside a clear count for this to be heading higher, because it failed to hold some of the more ideal support back here in March and April, with the drop lower here at the beginning of May. We do have to consider that this was all of the third, and this could still be, while this might have been A, B, and C for all of this fourth, we could still get another B wave, or this could still be an A and a wider flat for yet another B wave, and it could still come down again as that larger fourth, which we can put here as an orange 4. So ideal support that we really want to see hold in the Russell for this to head immediately higher is going to be the 2260 region. It can be an extension of this A wave in a new, 1, 2, and then in this third, but moving this third farther out over here. So if that's the case, and this is wave 2, this could be an extension of A as 5 waves up, and it could break that 2260s region as an alt version of this small degree B wave. But if it gets much under 2220, it starts to get very, very hairy again. And that's where it runs the risk of a drop down towards the 2000, or maybe if it's going to break support at this point, it might want to go ahead and try and tag closer to the 200-day moving average. So certainly need to be a little bit careful here. At the very least, if it's not going to hold that higher 2260 and maybe even closer to 2280s as support, we can count 5 waves up here. Like I said, this could be an alt of this A wave, or if this was a more significant fourth, whether it was an alt of the green wave 4 here, where this was 3 and this is 4, and this is still coming up here as the 5th of this 3, and then going to get another 4 or 5 longer term, or whether it's the purple 3-4 and it's just heading up towards the 2787, this can be the wave 1 of that next move. Instead of the A and the B, it can be 5 waves up, and it can get a retrace back towards the 2200 region, and then get the rest of 5 waves up towards maybe that 2800 region there. So certainly do have some bullish potential off of the recent lows, but the exact structure off of that we saw that was so clean and clear way back here has kind of fallen by the wayside on the Russell. Next, wanted to take a look with what I usually do with you guys, and that's look at the equal weight version of the S&P 500. I think it falls very much in line with the way that I was discussing the counts for the S&P 500, but I think it is more pronounced, at least as the 5 waves up for wave 1 and the wave 2, in line with the way that Garrett and I are counting the S&P 500, instead of counting 1, 2, 3, 4, and this as the 5th wave of wave 1, because this really didn't, only made a nominal higher high, and this consolidation is actually a deeper magnitude of a move, a stronger retrace, even though this is pretty wide and took the better part of 2 months for this consolidation. It fits better as the 1-2-1-2 in the equal weight version. But the same applies, and actually I think the equal weight version kind of leans a little bit more towards this being the 3rd of just all of the minute degree wave 3, rather than getting another 4 or 5 inside this same 3rd. But the ideal target for that is going to be up in this 163 to 165 region still. This can be a wider version of this micro wave 2 here, but we still have the same 1, 2, 3, 4, and are looking for the rest of a 5th wave up in the 5th of a 5th off of that March low. So at the very least, we should get a spike up probably towards the 156, 157 region, as at least if just a nominal new high, but really extension closer to that 163 is more ideal. And if we do zoom in on the structure that we have off of the low, there's a little, you can make a little bit more of a case in the RS and RSP for counting a running flat here for the 4th, and then a 1-2-1-2 structure off of that low, or maybe just a wave 1 and a wave 2 if this wants to get a little bit of a deeper retrace. You can count this as 1, 2, 3, 4, 5 waves up for that wave 1, but did not actually make a clear higher high. So looking for more extension of this off of this May low towards the 160s is the ideal move to complete. But again, while we can scalp those moves and look for that as a guide for further immediate upside, we do have to be aware that when this move completes and we're starting to really kind of grind and round out a top, And if we break support, we could be in this fourth wave already. And the support for that fourth wave is easily, 8% where we are now, as a normal support region based off of this high. So do have to be aware where that risk skew is and make sure that you are adjusting stops as necessary on your individual positions and keeping that risk skew in mind with all of your positioning, in whether it's index trades or scalp trades or longer term positioning or what have you. All right, I think that's a good review of the main index charts. Still no questions on anything EW-wise or site-wise or service-wise yet, so we'll go ahead and move on to talking about, I think maybe we'll go to oil next. Where's my working tab? There we go. All right. Usually, sometimes the names of my tabs mean something. Sometimes I just started clicking over until I found a cleaner version, and then I copied part of another count on it, and then I started adding the subwave structures at smaller degrees. So this is called macro clean, but it's actually what I'm using as my primary tab these days. We had the risk here of this being a B wave, but the way that it stretched to get a better 5 waves up and then held this retrace clearly decided to go forward with our more bullish green count. There is a risk here if we can't hold higher support of an even bigger, more extended B wave high, but I think that we'll just go ahead and delete that for right now. We're just going to more closely want to pay attention to support. So this was a pretty shallow fourth wave, so we had to be a little bit weary of the structure and consider some different alts, even though we we're watching for this green subwave path, and we're certainly following a lot of bullish charts in the energy sector as far as the individual energy names and stock waves, but did want to keep an awareness of some potential for more of this fourth wave since this consolidation was so shallow. But it's continuing to follow through very, very nicely. Subwaves here, we'll go ahead and decompose, and it's not going to put those in too terrible of a spot. Ideally, we would like to get at least this third up to closer to the 72 region, which is going to be the 100% extension. It is possible to count this as 1, 2, 3, and maybe get a fourth wave, and then a fifth wave up takes it closer to the 7450 region, which would be a little bit more ideal. But we're going to just keep this closer to 72 as the third of the third, and then look for maybe a little bit less extension there to only 7630 for the 1382 extension of our minor degree wave 3, and then maybe we're only going to get a nominal higher high. I mean, not so nominal. It's a good $12, $13 over the top of parentheses wave 3, but projected into the low 80s for the fifth wave. Certainly room for any of these fifth waves to extend. So if we blow past the 7190 resistance region as the possible top for this wave 3, can really certainly extend all the way up towards the 7450 region. And then if we do get that for this wave 3, then we can easily get this third up to the 79, and then easily get past 84 for this fifth wave, and maybe closer up towards the 90s like we had it as the more optimistic count before. All right, let's move on to gold. Gold is working on the start of a, let's go to the big macro clean tab here, the start of a larger primary degree wave 5. We have 1, 2, and a strong looking third. So even though this is only 3 waves up, it's a 3 waves up where it clearly looks more like a 3 than an ABC move. We held a minimal retrace for a fourth, and have a pretty decent looking move off of the June 3rd low so far that we can zoom in on, but we have 5 waves up. And so ideally that's the 1 and wave 2 start to this 5 of 1. Then we're going to be looking for a consolidation as a larger intermediate degree wave 2 after we have 5 waves up complete. And then a longer term swing move up as the 3, 4, 5 of that primary wave 5, targeting at the very least we should get to the next fib past the top of primary wave 3, but really looking at least towards the 2300 region as the 2618 extension, and the fib structure for what we have so far as what's projected for 5 waves up for wave 1 really is going to take us well past 2350 and easily up towards the 2400 region. Callie, I'm right now I'm only looking at that possible 5th wave up in oil. After that, even if it could be, if that was a primary wave 1 off of the 2020 lows, it would still be looking for a pretty significant retrace back towards the lows from earlier this year, from at least that 4th wave region, that parentheses 4. So until we complete 5 waves up and hold a corrective consolidation, I don't see any reason of without larger context, because that's a pretty significant low potentially in oil, of trying to project that even farther forward. So just looking for a consolidation after that green 5 waves up completes. So zooming in on just the 5 wave structure off the low, initially, well, I mean, I think this still counts best as a diagonal structure. So instead of a 1, 2, this might actually be the AB of the 5th wave, or maybe the AB of A, and we get a B and a C wave, but it is not an overlapping diagonal. It might have morphed itself into an impulse, but really this looks more like an ABC up for wave 1 and an ABC up for the 3rd. And GDX, which we'll see, and silver chart do still count best as leading diagonals off the March low. So they can all be diagonals, even though we got a very extended 3rd and then a shallow 4th, compared to what we normally expect in a diagonal on gold itself. Let's move on to the silver chart. And find the working tab. Nope, that's not it. Maybe it is. Oh yeah, it is that one. Okay. So silver counting 1 degree behind gold, because it actually made a far more significant low in 2020, where this is a 3rd and a 4th, an intermediate degree into the March low, and working on a leading diagonal for wave 1. Let's hide this so we can actually see more of the structure here. A leading diagonal for wave 1 of this 5th wave. And that is going to likely push the target for that 5th wave a lot higher than what we would normally anticipate for a proportionate 5th wave up, which is why we have that labeled as the more aggressive green count here. And really, if this is going to get a 5th wave up all the way up closer to 31 and then hold the 27s, Fibonacci pinball would suggest that this 5th of the parentheses wave 5 could even get closer to 44. But more importantly is going to be looking for this structure shorter term to complete. And that's what we're going to zoom in on here. So we have an ABC up for wave 1, an ABC up for wave 3, WXY for our 4th wave, and are looking for an ABC up towards the 30 to 31 region as our 5th wave of that leading diagonal, and then are going to be looking for a consolidation after that. back towards at least the 28 region, if not closer to 27 or 26. Depending on where that actually tops, that's going to be our ideal fib zone. And this fits very nicely with GDX. And I think GDX, my operating count is also on the tab labeled Big Macro, because whatever primary tab that I was using before probably got too messy, so I just went over to a cleaner chart. This looks like a bad tick at the end of the day. But again, we are looking, we're looking at a leading diagonal working off of the March low, in this case completing wave 1 of a parentheses C wave, and that's inside the third of a larger diagonal. So that's the larger primary degree wave 3, we think is morphed into an A, B, and starting a C wave up, but still gives us a very, very large magnitude move. But more important structure that we're looking at is filling out a better 5 waves up off the low. It is possible to count this as 5 waves up, but if this was a smaller leading diagonal to complete wave 1, we would have wanted to see it hold here as 1, 2, 3, 4, 5. This stretch higher made it look a lot more likely that this was only the third and it's holding a 4th wave. It is still possible to get deeper in that 4th wave, but like we saw in silver and ideally in gold as well, it completed just a wider, more shallow, flat consolidation for the 4th. We have nice parallel trend lines for our diagonal and should be starting an ABC move up towards the 42 to 43 region to complete that wave 1. If that is in fact where we top, then our ideal support is going to be the 38 down towards basically the 35 region for the wave 2. Now, zooming out, let's clear that local data so we don't have that errant tick there. So this structure, looking at a 3-day chart, gives you a bigger picture of the diagonal. We have an ABC up for wave 1, this very, very wide, awkward, expanded flat that spiked just a little bit under the 618, almost down to the 764, but then reversed very sharply in March 2020 as the primary wave 2, and then a move up, even though it came up to close to a 100% extension. It does look more like this is only the A wave and the B wave, and then we're getting our 5 waves up as wave 1 of this C of 3, targeting ideally the 74 region, although the 100% extension for our C wave actually comes up closer to 87. So we can zoom in a little bit more on that. We can see that this, on this view, you can clearly see that it looks very much more like it would like that better 5th wave up and then the wave 2. And this can be a pretty nice long-term, good magnitude move, even though technically it's a C wave inside a larger diagonal. All right, what else do we usually go over? Oh, maybe we can take a look at bonds. We'll take a look at the 30-year Treasury. And let me go to a larger degree move here. So I think the Treasuries, I think, are in a very, very, very large degree diagonal. And the 30-year bond, I think, had an expanded running flat for the cycle degree wave 4, and is working on the primary A, B, and then we're going to look for a very significant blow off top to bond prices as the primary C wave of that cycle wave 5. So as extreme as this seemed, I think this move is going to be even more extreme, but then that is going to be a pretty significant top in bond prices or a pretty significant low in yields, if you prefer to consider the yield of the treasuries as opposed to bond prices. But going back to this tab, Inside our primary B wave retrace, we can count this as an ending diagonal down for this orange C wave that topped back here in August. And inside that C wave, while we have certainly retraced enough for all of the primary degree B wave, we hit a 618 retrace, and we hit, in terms of the measured move, down from this quote unquote B, we hit a 1, 2, 3, 6 extension. We don't have a clear 5 waves complete. So while it's possible that this is all of a B, and this gets more than just a 4th wave bounce, the prudent expectation is to look for this to only be more of a 4th wave bounce as our orange 4 of our ending diagonal, and then look for another drop to a low under the March low for the 30-year bond prices before that actually gets a real wave 5 up. Now, if it gets past this 164 to 166 region, then we'll start to consider that this is more than 4. But right now, if we're looking at this as a possible 5 waves up for an A wave and an ABC retrace 3 waves down as a B wave, our measured move takes us up towards the 162 to 166 region. So we can be bullish for that swing. And if it turns into more than 4, great. If it clearly looks like it's completing 5 waves up into that resistance region, then that's a good opportunity to exit any longs and look into some protection for an exaggerated final drop before a potential monster reversal that starts a lot more impulsive looking than this off of a low here. And then let's take a look at the dollar. And then if there are no other questions, I think we'll go ahead and end there a little bit early. My dollar chart doesn't. There's a stock ticker that is also DX. So when I switch between, when I just pull up the @DX hashtag or DX, like they get mixed up with each other. I count a possible 5 waves down from a significant top in the dollar into the January 2021 low. And from there, a 3-wave bounce that possibly fulfilled the minimal requirements for a B wave, which I have labeled as a red B here. More ideal in terms of those people who are not yet ready for a collapse of the dollar would be that this is only the A wave of a wider version of that green B, which would come up a little bit closer to a 382 or a 50% retrace. But in terms of an A and a B, this here is definitely not a clear ABC corrective retrace. This looks a lot more like a mean, nasty red wave 1 start to a potential measured move down. So in the short term, it also came to near a 100% retrace of the quote-unquote green A wave. So this could be a red A, B, C for all of the B wave and the wave 1, and maybe it's trying to bounce more in a red wave 2, but if I have a red count on my charts and I'm looking for more of a bounce as the wave 2, that bounce is really not a good long proposition. That is more in line with what I would look for as an opportunity to short something, as opposed to, or just where to set some resistance levels, our normal expectations for resistance if you're already short. And so I would be very, very careful about pure dollar exposure based on the potential structure in this chart. TLT is going to be very similar to the 30-year bond chart. I like to use the bond futures because they trade more hours than TLT. What I will say is this move off of the low in TLT is far more clearly only 3 waves up. It also looks like it's further ahead in the possible C wave of the wave 4. But what it does allow for is if this is going to turn into more than 4, instead of being an A, B, and a C wave up, this could be working on a leading diagonal, where this would be wave 1, wave 2, maybe an A, B, and a C wave of 3, and then a 4th and a 5th wave up for the wave 1 start to that larger C wave up off of this March 2021 low. Mark, your Stockwaves question, post it in Stockwaves, and I'll get to it after the video. Unless I mean, if it's about Stockwaves, then I can try and answer it. But if it's a question about specific Stockwaves analysis, then we'll keep that in Stockwaves as opposed to the beginner circle, which is not the purview of Stockwaves itself. All right, go ahead. What's your question? We'll see how fast Mark can type, everybody. Oh, okay. Mark, ask in the in a Stockwaves thread in terms of analysis on a specific stock, and we'll take a look at that. If not, if I can't easily explain it as a reply to your post or with a new chart, then we can certainly talk about it in the Stockwaves webinar tomorrow. All right, well, I guess I'll let you guys out a little bit early. Oh yeah, we can take a quick look at platinum. Platinum filling out a larger, we still are very bullish on platinum, but we were allowing this to be 5 waves up for an impulse for the wave 1, but it needed to hold. Once it cleared this level as a breakout, we needed to hold the 1217, 1220 region and continue going for that to be an impulse. So once that broke that micro level of support inside of an impulse, we started looking at this being a larger diagonal. And so in that larger diagonal, we wanted to see we were counting this as 5 waves up for an A wave. This retrace could have been all of the B. We were looking at this as a possible leading diagonal as the wave 1 of the C of parentheses wave 3. But it started to show signs of weakness and wasn't really getting the follow through to get closer to that 1350 region that we wanted to see for a better 5 waves up, and then started to leak a little bit more. This should have been the 3rd, and this should have held as the 4th and gotten a 5th wave up. When it broke this low, that was where it immediately put us on alert for looking for a wider flat consolidation for this B wave. So maybe we're not going to get all the way down as a measured move because it is really holding a very clearly corrective consolidation as a wider flat. It could even be an A, B, and working on the C wave, a very muted C wave for running flat that does not actually make a lower low here. But this is not clearly the 1-2 start of the C wave of 3 yet. So we do have to still allow for this to get potentially lower towards the 1050 region or maybe even 990s for support, or look for a clear, at least a micro 5 up, 3 down as a new start to this wave 1. So perfectly happy to scoot this B wave over. If it starts showing us new signs of a bottom. In the mining stock service, we still have a PPLT position that is long platinum, and plan to hold that well in towards the 1700 region, which has great confluence with our C wave up and our 1236 extension for the 3rd, whether we actually get lower or not for this B wave. I think that 1750 is really our ideal target. We do plan to add a little bit more platinum exposure if we can get new clarity in terms of a either deeper here in the C of this wider B wave or a clear 1-2 start again to that C wave there. Elaborate on, you're going to have to ask some more specific questions on the ES chart from May 13th onward. So that's the fifth wave of our fifth. Whether it's the fifth wave of the fifth of this wave 3 or this wave 3 doesn't really matter. It can count as either an impulse or a diagonal. In either count, whether it's an impulse or a diagonal, let me zoom into the 30-minute, we're still in that microwave 3. And whether we're the impulse or the diagonal, the ideal structure off of the June 3rd low is a diagonal targeting the 4,300 region that has ideal support at 4212 right now. So if you have a little bit more specific questions from that, I can try and answer, or you can go ahead and put them in the thread and I can take care of those offline. All right, well, let me get this uploaded for you guys and I will see you next time. Have a great night.